Alrighty guys, welcome back to another episode here. I hope you guys are all having a great and amazing day today. In today's video, I really want to talk about the top four growth stocks that I am going to be buying more of. A lot of these I do already own, but there's been so much volatility and so much sell-off over the past couple of days. This brings so much opportunity for investing because you never want to buy when the stock market is hitting all-time highs. You know, that's what they always say. Oh, just keep buying, keep buying. But why wouldn't you just wait for a sell-off? And recently, we did get some major sell-off from a lot of huge companies that, in my opinion, carry so much potential. But the first one here I want to talk about is Beyond Meat. You guys can see Beyond Meat did get some sell-off. We're trading for around $180 all the way down to about $145. Now, Beyond Meat is in the works with McDonald's of getting a partnership deal. I think that would be phenomenal. Not to mention they already are in a deal with Starbucks. So I really believe this company here carries so much long-term potential. Basic resistance here is around 74. Support is around 120. Dollar cost average this one all day. Not to mention for one lump sum, I really believe around $140 would be a perfect one lump sum investment here. This one, in my opinion, carries so much long-term potential. But now another one, ticker symbol LMND. This is an insurance company. Let me pull it up here. LMND, Lemonade Insurance. Look at the growth here. Hitting highs here at 188, consolidating for a long time, then went up to about 168, sold off down to 125. RSI is pretty much telling us it's undervalued. Really believe this one too carries a lot of potential because this is different than a lot of other insurance companies. Now, their main target customers is millennials, and they make it very, very convenient for people for getting in your insurance. They have anything from rent insurance, pet insurance, and home insurance. Not to mention, almost every single year, they're really doubling their customers, which is phenomenal because with insurance, it's pretty much you get a customer and it's almost a long-term customer. And I really believe that Lemonade does carry a lot of potential, and their gross margin and their profit margin is very, very high here for this stock here. I really believe this one does carry a lot of long-term potential too here. And with the sell-off, perfect time to invest. Now, another one here is Palantir. Palantir is a software company and data company, and they have a lot of awesome partnerships. They have one with the U.S. Army. They have a couple other ones, and the U.S. Army one's $90 million. They had a renewal for $300 million, and they have a lot of money coming into the business, so you don't really have to worry about cash flow. The reason why I love this is because the stock here hits $45, then has sold off all the way down to $24. I really believe Palantir carries a lot of potential. We're just getting started, in my opinion, on data and software. I really believe there's so much momentum behind a lot of these companies, and especially Palantir. Now, the CEO of Palantir is the old CEO of PayPal. So I really think that's phenomenal because he is in the software computing. So I really believe that's fantastic. Now, another stock here, and the last one here I want to talk about is NIO. You guys can see with NIO, normally trading anywhere from 62 to about 55, sold off down to about 46. Another one that has sold off, this one sold off 16% this past week. That brings so much opportunity to invest. You know, a lot of these growth and tech stocks have been hit very, very hard. But NIO, they are an electric automobile company based out of China. They're pretty much almost doubling every single quarter with deliveries. I really believe this one carries so much potential. They're pretty much like the Tesla of China. That's pretty much what they are. I really believe this one here is absolutely amazing, and in my personal opinion, is a huge buy. This one here would be perfect for dollar cost averaging too, because you can use the volatility of it to your advantage. You know, dollar cost averaging is a fantastic way to invest with little to no risk, because you can invest, you know, instead of investing into, you know, one lump sum investment, so you just invest $1,000, you could be buying overvalued. So what you do is you still invest $1,000, but you spread it out into weekly or monthly increments. So $100 a week over the next 10 weeks, you still invest $1,000, but you get a good average price for that time period. It's a phenomenal investment, guys, but really, these were the top four growth stocks that I would recommend buying with the overall market volatility and market sell-off.